Here we're looking at the S&P 500, and also the Elliott Wave will start this week again. In fact, the 4-hour charts have been updated, and the intraday will be updated on the London opening. And also we've been working on the downloadable Profit Keeper version, and hopefully that will be ready later in the week as well. Okay, so the S&P 500 here, look, essentially in Elliott Wave terms, as long as this low here stays in place, then we'll be looking for somewhere up around the 1735 sort of area in terms of the Fibonacci target zone. However, in trading terms, we're really looking for a nice solid support on the 1700, and we're getting that now in terms of this retest back into here, and then we'll be looking further up. Now, the 1710 is going to have a lot of impact, and so is the 1720 here. So they're numbers that you would want to be working to. And as far as the wave structure goes so far, this just looking for a little wave 5 to wave 3 here at the 1710. So, if you're going to trade long here, you really need to wait for development to occur here. So, the arrival, the reaction, the first high above the level, the A, the B, the C wave, and then like sitting on there and, finding a way, buying new highs is always a good bet, and up to the 1720. But between 1710 and 1720, the numbers that we use in terms of the trading levels, mostly Fibonacci numbers, would be the 1, 2, 3. So 1713 support on that would get you to the 15, and on top of the 15 would get you up to the 18, profit taking at 18, and then into the 20. So that type of method. So the US 30 up through here. So looking at the 4-hour chart and coming back into this wave C low here of wave 4, we're looking up for wave 1. And A, B, C back for wave 2, and then as far as I can see here, we've got wave 3 up to here, wave 4 pulling back to here, and then we got wave 5 coming up through here, support on the 15.5. So as just mentioned, then we work in 1, 2, 3, 5, and 8, and that would be our next target once we've achieved support on the 5 here. The extension was in wave 3, so that means that wave 5 here should thereabouts be about the same length as wave 1. So that's what we'll be looking for up there. So perhaps even higher than this. The European markets, the FTSE, been a bit, this correction back through here is a bit long and we wasn't sort of expecting it to pull back that much, but I was just expecting it to come across the 6700 here and find support on it. However, the wave structure to the upside is still positive. This little correction, this move up through here appears to be corrective, so we can get a new low down through here, but we really do want to find support on the 6620 or the 6630, and then we want to see a push back up there. Now, this particular price level here is really important, the 6,650. So we want to be able to eventually find support on that. But this move up here is corrective, so we're going to get another move down through here and possibly taking that low out there and then back up there. So you need to wait for support to come in back through here for that. The Australian market as well, as I mentioned, has been going through the 5,000 here. It's been very difficult to count this structure in through here. It's just been vibrating a lot, but it has been edging higher, and we've considered the situation of, well, first of all, being above the 5,000, we need to be looking at long trades, and then we need to move to the closest, largest number and work from that point. Now, that can just go to the 50 there, because the halfway market's the most important between the 5,000 and the 5,100. Now, it's just above the 5,100 here, and I can count 5 waves up through to here, looking for a top of this little third wave here. We're looking from this point here up for 1 here, the A, the B and the C here for 2, and then trying to work out the best 5-wave structure that we've got coming up through here. I mean, that wave 3 could actually be there as well. I'm just not that sure on it, but let's just dive in there and have a little look at the situation a bit more. And if I've got a smaller chart than that. Okay, so this is what we've been tracking the other day. We were looking at this, looking for an A wave, a B wave, and a C wave, and we got that. So we know this is corrective. It's in a nice, 3-wave structure. So we knew straight away that this high would be taken out here. That's been the case. So what I wanted to do this time around is have a look at this wave structure up here. It's not the best, but in one way or another, we can say to ourselves, well, this is the beginning of the structure. So this is wave 1, 2 in here. This is the strongest, so this has got to be wave 3 here. And then we can see that it's sort of creeping along here now. So we could say that that's, wave 4s and 5s up through there. So we could say from this point here to this point here would be the 5-wave structure. Well, actually from this point here, this low here, but basically the 1, the 2 here, all the 3rd wave here, the 4th wave and the 5th wave. And this has got 5 waves in it as well. I've pulled that apart earlier. So that means we should see basically an A and a B and a C wave here before we see any further upside. One of the main points here, though, is that, we do need to see a correction across here would be nice, because then this correction will be the basis for the next move up to 5,200. So what I'm actually just trying to say here, even though the US markets are up and so forth, we can follow those markets like 80%, but I'm just suggesting that this market here, this 5-wave structure here, even though it's not clear, should have some type of little correction here. Just want to have a look at the volume the volume on Friday. This is the cash market here. This is the volume on Friday. So even the price was up, but we're on lower volume here. So it's not like we had an increased volume to the upside. If that was the case, if we had more volume on the Friday, then it makes this run here much safer as well. Of course, the banks have had a bit of a knock around, and I do feel that some of this run here is due to the banks, and that of course is coming up for dividends as well. So I think the CBA is on the 14th, but you better double check that. But that can really sort of lift the market and be sold off after that. So so this trend could last to the 14th of this month. Okay, let's have a look at commodities. Okay, starting with gold. Look, even though that the market has come down here for gold, we feel that the whole move down through this place is actually bullish corrective, meaning that once it's complete, making a new high through here. But at the same time, we're just a little bit sort of unsure, and first of all, the 1300 here is still that's the closest largest number, and it's not support and it's not resistance. And one of the reasons that we feel that the market can move higher is because of silver. On the 1-hour chart for silver through here, not that you need to understand all these zigzags or anything, but what I wanted to point out is that even though that silver's been moving down through here, through the 2000 mark here, the $20, it hasn't been showing impulse waves to the downside. There've been corrective waves and overlapping wave structures. So you can see that quite easily, that the market's moved down through here and it's moved back up to here, moved down, it's moved back up to here, moved down, it's moved back up to here. So all of these here are overlapping wave structures. So it's very much a bullish corrective pattern to the downside. So it even though that it could continue like that for a while, I know it's really messy, but it just got that corrective pattern here, which means that it should move higher. This is a bit of an impulse wave moving up through here, but it's also not complete as well. So reverting that back to gold on the same 1 hour chart here, it's probably got a bit of a neater structure here, but it's still got quite a bit of overlapping sort of wave structure, and yes, I can count it in different ways, but it still doesn't make it any clearer for us. So and we've been waiting all through here, and we could see that it was getting a bit weaker at this stage, but I don't know. I really can't say much about it, unfortunately, except that we just need to give it some more time, and this may be the push up that we're sort of looking for. But even so, we can't really go long until we've got some real sort of sure situation that we got support on the 1320, and better still the top of group 1, the 1330 there. So even if this is 5 waves up here, it would still need a corrective ABC correction. So let's just give it a little bit more time to resolve itself. But it has got a bullish bias, even though it's dropped lower, but we just need to see it unfold a little bit further so we can get a better grip on it. The copper market here, this move that we've got up through here, I'll just bring it back onto here wherever we are. So look, the move up that we were looking for here, we were looking for the move to 318 or 320. 318 is a profit-taking number, and it was doing its job. Of course, the 320 is the strongest level that we're looking for here. So we've basically got the arrival here. So we'll be looking for the reaction, which is happening, and after the reaction, the first thing that we look for is support, and it seems to have found some support here for the short term at least at the end of the session on the Friday. So we should see some type of ABC correction here in 3 waves here as such, before we see any sort of further upside there. But what I'm pointing out here is that support on the 320 here would be more positive bias for the BHPs of the world to push higher. We know that our local BHP is pushing up quite nicely, and the US BHP hasn't really moved yet here either. So a nice break up to the upside here would be good for that here. I'm just testing out a system here, so don't worry about that. Right, the oil market. I haven't even looked at this. I'm sorry about that. Let me just sort that out. It appears the move up through here is in 5 waves, so we should expect an A and a B and a C wave back before we see any further upside. This first area here is the 38.2 retracement level, which is comes in around the 106.50, which has always been really quite important to oil. However, so we can expect to bounce off this and then another 5 down. If this is not a B wave and the ABC is actually already in this move down through here, well then of course support on the 106, 108 would just take you much higher from that point. But just be aware of this move up through here. So there will be opportunities for long trades through here too, if you feel that you can see impulse waves eventuating through here, and that would be on the 107 and the 107.20 and the 107.30 as well. But just be mindful that this is not just in 3 waves here as such. If you see it develop into 5 waves here, then you can look for the A, the B and the C wave here, and then catch it from the next move up there, because this would be up for 1 and back for 2 at this stage. Brent has also hit the next level there that we were talking about before. If I can just find Brent here for a moment. Yes, at the 101 here. So the same thing goes here as well. So it's really just the first, it normally reacts in 3 waves here, but once that's done, then we'll see the first high above the level and then another situation like this here occur here, and then that's where the next long trade would be. So, really using the levels, you'd trade to here, and then you just wait, until all this time here, until this setup arrives over here for that. Right, the copper market, we just looked at that. So looking at the corn market here, and just have a look in the bigger picture here for a moment. So what we're looking for here is we're just counting 5 waves down from this last high here at 600, and we've got a nice clean 5 waves here. So we're looking for the wave 2 to come back, and then we're looking for the next 5 waves down, which we're looking for a bounce, off this sort of group 2 area through here. This length of this here should be roughly the same as wave 1 here, because the extension is in wave 3 here, and then we're looking for some sort of pull back through here. But in looking at this little move through here, it still seems to have got more legs to play out through here. And what I was looking for here is that this, I'm not sure if this is 1 and then wave 2 into here, this is 3 and then 4 and 5, otherwise that would be finished to that point there. But otherwise this is down for 1 here, back for 2 here, it'll be down 3, 2 into the 470 here, the 4 and then the 5 here, and the bounce off here. So we are looking at group 2 in here still being the support sort of area for here before we get another bounce here, and then there'll be the other short from this side here. Alrighty, let's have a look at FX. Okay, starting with the euro here, and look, we're still considering this top to be in play through here. I know it's against the trend here, so it's always tricky business. And the 132 here, or the 2, is also the group 1 here, from 1, 2 and 3 here. And normally when the pivot within group 2 becomes the retested resistance, then the bias is to the downside, and that's not the case just yet. Not to say that it won't be, but just bear that in mind. So this move that's down through here does appear to be in 5 waves, so we'll be looking for a counter trend here in 3 waves, and then moving down from that point there. So well, of course, if the 133 here, if this moves up and finds support on here, well, then we need to trade what we see, and we need to trade in that direction. But just in looking at this so far here, we do have 5 waves counted down through here, so we can look at this as the A, the B and the C wave back up here for wave 2. I've got this on a better picture here, slightly. Look, but the main point here is that if this is a wave 2, an A and a B and a C back up here, then we really want this number here is really important, this 1.3272 here, the 272 number here. We need that to be at resistance there. So just allow the market to open, and this would be the 5 wave structure coming down from this point here. This would be down for wave 1, cross for wave 2, all the way for wave 3 here, wave 4 to here, and wave 5 to here, the A, the B, and the C wave up through to here for wave 2. So we do need to see it work lower from this point. If that's not the case and this stays as support here and it moves up through here, we still have to wait, because any move up through here would come back and into group 1, would take a while to sort itself out, but it would give it a positive bias at that point there. And certainly if that was the case, then support on top of group 1 here would be the catalyst for the upside there. But let's just allow this to play out and give this enough space to see if we're right through here. So what we want to be looking for from here is a nice little clean impulse wave, a 5 wave structure, and then an A and a B and a C through here. So it's a very iffy sort of area here, so let's just allow it to unfold. So long trades would be up here after a consolidation on top of the 133, and the bearish mode would be the 13272 as the resistance there. The Australian dollar as well, just start from the bigger picture here, is in know, we've been looking for going from wave 4 down to wave 5 here, and looking at this being wave 1 here, wave 2 here, and looking at the third wave coming down through here, and then we're looking for the fourth wave and the fifth wave. So I think we're very close to the third wave at the bottom here, and we'll be looking for a fourth wave back. And if that was going to be the case, it would be the bounce off the 89. So while it's above the 89, you can consider a possibility of the bounce of wave 4 being underway, but under the 89, well, then you've got to consider that the third wave is not complete yet. So just in drilling down into this a little bit further through here, wave 3, wave 4, down to wave 5 here. The Feds had their say here, which reflected back into obviously the euro and the US dollar and so forth. So we're looking for wave 4 here to come back to the wave 4 of 1 lesser degrees into this area through here. But as I mentioned, the 89 here as support or resistance is really going to be the main key in that sort of area through there. But still looking, after we get some sort of bounce here, it's a bit hard to read it when the market does that sort of sharp bounce there as such. But the way that I was going to count it was that the wave 3 into this little area through here, wave 3 low here, and the A, the B, and the C wave back up here for wave 4. As I just mentioned, it would need to stay above the 89 there for that to be the case. So if it does drift down through here, then we need to trade it lower. But even then, I wouldn't short it unless this 72 here became the resistance at that point there. So essentially taking that low out there, a breaking of this low here would trigger the short trade to the downside. This little pattern in through here, by the way, it also looks corrective as well. So that means that there's a reasonable chance this can just push up through there. So this looks reasonably positive through here with an A and a B and a C coming back. So look, the 89's a line in the sand. Essentially, you need to be on the right side of that. If I got that on a smaller picture here, yep. So that looks reasonably positive up there in terms of an impulse wave, but this is certainly corrective in its pattern to the downside here. So using 10 support on 10, you can go along from that. The 20 story, and you certainly know the top of group 1 here, which would be which would need a support to get to the midpoint 50 here. So yeah, just build on that side of the market and just understand that it's possibly part of the wave 4 going to the upside, if that's going to be the case there. Yeah, so stops would go under that last low here, of course. Alrighty, well, that's it. Not a very detailed report, so apologies for that. It's just late on a Sunday evening, and so the Australian market, just sort of recapping a little bit, is ready to sort of edge higher. We need to be a little bit important because of the tomorrow we've got for the Australian market, we've got retail figures on Monday at 11 o'clock, so 11:30, and so you need to be aware of that. But on Tuesday, we've got, what have we got on Tuesday? We've got trade figures, and we've also got the RBA rate announcement at 2:30 as well. So it should be interesting, because the Australian dollar, if it's going to run to the upside, well, then that would be on the bias that there's going to be no rate change, and there'll be no rate change on the premise that the US economy is strong. If there was, so the manufacturing figures tomorrow in the US actually will be quite important on that too. So the non-manufacturing PMI numbers for the US would be another little clincher in that as well. So alrighty, well, that's it. So good morning, good luck, and enjoy the day ahead.